Good morning, everybody. It's Friday, June 16th, 5:14 a.m. Central Time. Grain markets higher across the board here to start. Matt Bennett, thank you for joining me early this morning. Mackenzie, why don't we start off with price action here, which has been pretty darn impressive.
Corn and soybean prices have rallied sharply. The December 2023 corn contract rallied more than 90 cents per bushel from its May 18th low to its overnight high. The November 2023 soybean contract rallied nearly a buck 80 per bushel during the same time frame. This appears to be a crop scare event that could turn into a crop loss event quickly without a shift in the weather forecast. Fund traders likely covered shorts and added length in the corn and soybean markets this week.
All right, Matt, is this a crop scare event or is this now a crop loss event where we have to start penciling in lower yields and it's just a question of by how much?
Well, that's a really good question. And I would say if you're using 181.5, yeah, it's probably a crop loss event. I don't know. I think you're going to struggle to make the case, for a 180 plus yield with any more dry weather. And I would say right now, the thing is the forecast doesn't look good. So where I'm at, we were super fortunate, picked up some rain this past weekend. You go north of me 40 miles, people didn't get any rain. And so, you've got to think, especially some of the lighter ground has already been hurt to an extent. Now, what extent? It's anyone's guess. As you know, Joe, these hybrids are different. They're way better than what they were back in 2012 even. And so, getting a handle on it's the thing. I've had people ask me, how high can this thing go? And I said, the thing is, until you get a quantified type number, it's going to be really hard to put a finger on it. So if we come out of here on Tuesday, Monday night, Tuesday, with a dry forecast, I'll tell you what, I would assume you're going to keep rolling, but I would like to see if we break through this 584 on D's corn. If we do, be a pretty interesting day here today, even.
Okay, the deal, in my view, is that we're in the process of discounting perhaps like a worst case scenario. And how do you not do that? Because there's no rain in the forecast for the Central Corn Belt. We'll talk about weather in a second. But until we see some sort of shift, I mean, we have no clue what the yield may be or what potential crop losses may be. So what is the price of uncertainty when it comes to yield at this point? I mean, what if you end up losing 20 bushels off trend? What if it's worse than that? I mean, you can't rule any of that out at this point, given the conditions and the forecast. Given that, let's jump to the drought monitor here, which does not look good.
Yeah, so USDA released weekly drought monitor data yesterday. About 55% of the contiguous U.S. is experiencing some level of drought this week compared to 58% last year. Drought conditions improved in the western Great Plains as portions of the region received above normal precipitation. In the Corn Belt, however, the drought area expanded and conditions worsened due to a lack of precipitation and above average temperatures. Drought conditions aren't expected to improve in the near future, as the forecast calls for a large portion of the central Corn Belt to remain dry over the next 7 days. So if we look at the percentage of U.S. areas experiencing drought, corn 57%, soybeans 51%, winter wheat 50%, spring wheat 4%, and cattle country 42%.
Just the week over week jumps. Corn went from 45% to 57% in 1 week. Soybeans went from 39% of those areas up to 51 in 1 week. Here's your week over week changes. And then here's your 2012 comparison. So we look worse than 2012 right now on the drought monitor, which goes back to what I said earlier. I mean, the markets may be in the process of pricing in a worst case scenario at this point. One thing I'll also mention before I let Matt comment on this is that a lot of the meteorologists that I've listened to and talked to said the weather pattern this year doesn't resemble 2012 at all. It's a totally different setup. But if the end result is the same, then does it make a difference?
Yeah, I've had the same conversation. So, here's the thing. Yeah, it's not set up the same way. 2012 is a different type of year. Super warm in March. We got really early plantings in March. Got off to a phenomenal start, but we didn't get this dry this early. So May was super dry. And so How do you impact the corn? How do you impact these corn hybrids with a lot of dryness in that V7, V8 stage? Because that's when most of your agronomists will say you're going to set your ear size. So, if you have a really wet into the growing season, and you have smaller ears, you can still have awfully good corn. I mean, we know people are throwing 35, 36, 37,000 ears out there. But the bottom line is, if you have a small ear, I'll tell you what, it definitely puts you behind the eight ball. So I'm with you. You're priced in a worst case scenario. With that being said, I want to point out, as you've talked about, as I've talked about, demand sucks. I mean, okay, so you have to rely on Mother Nature to keep this rally going. You have to be very well aware that exactly what you said. The reason that we don't know where we're going to go is because we've got to find a number. We've got to get some sort of an idea just how bad this situation is. We turn off with a wet forecast a week from now, it could be pretty ugly to the downside, just like we've had this race to the upside.
Yeah, the row crop markets are as good as the next weather forecast. That's what they are. Because, we don't have the demand in corn in particular to support these prices. But guess what? That doesn't matter if we have no clue how bad the yield could be potentially. You have absolutely no clue. Not within 10 or 20 bushels per acre, you don't have a clue, given this setup. Let's jump to the weather forecast here.
So weather forecasts for the central U.S. Corn Belt remain mostly dry. The next 7 days should be dry for much of Illinois, Indiana, and Ohio. Eastern areas of Iowa and Minnesota will also stay dry. Areas of the plains and southern U.S. have much better rain chances. The Euro and GFS models are mostly in agreement regarding the absence of Corn Belt rains over the next 10 days. The extended GFS run through July 2nd maintains a drier outlook for these same areas.
So same deal this morning. I mean, the forecasts are not good, and you look at where it's going to be dry. I mean, this is a huge portion of U.S. corn production in these areas. So the drought is this building drought is hitting us where it hurts here. But Matt, I mean, I've seen this before. We got a 3-day weekend coming up. If you come in Monday night and there's a bunch of rain in the forecast for Illinois, Eastern Iowa, Indiana, I mean, this thing just falls apart, doesn't it?
I would agree, but let's talk about what the forecast is. Is the forecast like over the next 24, 48 hours because the environment's shifting, or is it still that 10 to 14 day magical window that we
Right.
continue to get? Now, I want to say I do not want these guys' jobs. Snodgrass, Drew Lerner, some of these guys, they're great. They're excellent at what they do, but the bottom line is Mother Nature's a rip, and it's really hard to figure out what she's going to do. I don't want their job moving forward, but I'll tell you what, the GFS 10 to 14 days, they keep pumping moisture. It's been going on for 3 weeks.
It has been.
It's never verified.
No.
Okay. So I agree with you. If the forecast in the short term looks like we've got a really good chance for rain, this thing is going to fall apart and very quickly. And people are going to sit around saying, why in the heck didn't we take the gift that was given us?
The thing about it is that so the weather cannot be predicted. We'll agree on that, right? The weather is the sole driver of row crop prices right now. You cannot predict the weather, therefore you cannot predict the prices. Everybody's looking for an answer. When do I sell into this thing? When do I sell into the crop scare event? How do I go about doing it? The answer is nobody has a damn clue. Nobody has a damn clue because the market is as good as the next weather forecast. That's where we're at right now, and that's not the answer to these questions that people want to hear. But I mean, that's the reality of it, right?
It is. And I mean, so if you're a producer sitting here trying to figure out what I want to do here, and you were madder than what whenever you were at 490 corn, now you're sitting here at 580. So, maybe buy yourself a put option or something so you can sleep better at night, because a 550 put option, could be worth a ton of money this fall. I think you and I would both agree, that the downside risk for D's corn, if you would have a yield even approaching 180, given the demand implications that you and I discussed, for instance, on Wednesday, you're looking at from where we're at today, over a dollar downside in this corn market potentially. So you've got to understand. I mean, you've been given a gift. I mean, an old timer always told me, a rally's not a rally unless you sell some. You can sit here and talk all day long about what it did, but if you didn't sell any, I mean, what good did it do you?
I think all of our jobs become really tough in this environment, whether you're advising people on marketing grain or you're a farmer trying to market grain. When you're a farmer trying to market grain in this environment, yeah, we know that crop scare events are very often excellent marketing opportunities, but at the same time, you don't know what your production is going to be. And it just makes everything really difficult. We know you've got crop insurance. We know you got some guaranteed bushels, but it's still, this is incredibly difficult, guys. And don't let anybody tell you that this is easy, because it is absolutely not. Let's get to some good news on the demand front, which is something that we have seen very rarely as of late.
U.S. soybean crushings in May were better than expected. The National Oilseed Processors Association released its monthly crush report yesterday. NOPA members crushed 177.9 million bushels of soybeans in May, a record high for the month. The print was up 2.7% on the month and up 4% versus the same week last year.
This is supportive. Shout out to Shell Rock, Iowa. You are now included in the NOPA report. So we've got some of these new plants coming online, which are going to result ultimately in just record crush prints like every single month. We also saw I guess you call it a surprise draw in soybean oil stocks. So this is something friendly on the demand side, Matt.
Oh, absolutely. I mean, super friendly. Not only, you've got crush continuing to go higher. You and I both know that's gonna go on. Something we've talked about for several months. You look at what the soybean oil market's done here with, since May 31st, I believe we've rallied 13, $14. I mean, it's just an incredible rally for soybean oil. And so, it's a really good thing to see. And, I think one thing that I've felt all along is that we could have a pretty rough go here in 23, maybe even 24, due to how high our input costs were coming in 23, and we all felt like carry out was going to grow substantially. But one shining light, in my opinion, has always been what is the prospect of soybean demand and soybean crush. I mean, and obviously it's playing out in really good fashion. I think it's great news at a time that we need it.
All right, let's get to the other part of soybean demand and elsewhere, which is export sales.
So net corn sales of 273,300 metric tons for 2022 through 2023 were up 58% from the previous week and up noticeably from the prior 4-week average. Accumulated corn sales for the current marketing year are down 35% compared to the same time frame last year. Net soybean sales of 478,400 metric tons for the current marketing year were up noticeably from the previous week and from the prior 4-week average. Net wheat sales of 165,000 metric tons for 2023 through 2024 were down 30% from the previous week.
Okay, I think that at least myself, I'm starting to look at new crop sales. New crop soybean sales, our book of new crop soybean sales, it's the second worst of the last 10 years. Only 2019, when we were in a trade war with China, was worse in regard to new crop soybean sales. Maybe it's too early to get worked up about it. I don't know that it is. New crop corn sales would be average for like a pre-China buying year. So like, China started to buy corn mid 2020. If you go back prior to that, before China bought U.S. corn in a material amount, yeah, we're about average. But compared to the last 3 years, the new crop book of corn sales is absolute trash. Is this something to be concerned about?
I believe so. I mean, I think what would be really concerning is if we stay dry over the next 2 to 3 weeks and we don't see some massive purchases coming forward, because you would think someone's going to try to get out ahead of that, right? I think one of the saddest things that Kinsey said there was that corn was 248 and was up noticeably. I mean, what a pathetic number to begin with. I mean, you look at it compared to the last 2 weeks and it looks fantastic, but the last 2 weeks were absolutely atrocious. So corn demand, as far as the export front goes, needs to improve. And I would fully expect that if this weather doesn't change, it's going to improve dramatically, because I think there's going to be some scared originators out there.
Yeah, it gets tricky in this situation. Like, part of me says, you know what, nobody wanted to buy new crop corn when it was at $5 and now it's at $5.80. But at the same time, I mean, if the crop is substantially lower than what USDA has penciled in, or you end up losing 20 bushels off trend yield or something, I mean, who knows? All bets are off. Let's get to the economy and the stock market here.
U.S. stocks closed at their highest levels since 2022 on Thursday, one day after Fed officials announced a temporary pause on interest rate hikes. Data indicating that the U.S. economy is performing better than expected has kept investors optimistic. The S&P 500 rose 1.2%. The NASDAQ increased 1.1%. The Dow Jones jumped 1.3% on Thursday. Crude oil also saw a big jump, gaining 3.4% to end the day at $70.62 per barrel.
I know that the grain markets are trading weather like exclusively, but I think that this paired with like I'm not going to call it a bottoming action in crude, but at least the fact that it's been unable to maintain a trade in the 60s and it kind of bounces out of it, it takes some potential like outside risks maybe off the table for the moment.
Yeah, I think yesterday felt like more of a risk on day for sure.
Yeah.
And I do think a lot of that has to do, as you said, with a little bit of renewed optimism, not only from, the Fed not raising rates. I think a lot of folks were uneasy. What are they going to do here? I think it just gives everyone an overall generally good feel, along with, of course, the driver of so much of what we've got going on, and that's energy. And so, if you feel like you're going to have a $70 type base, yes, you may dip below it here and there. But if you feel that way, I got to think that it's going to be overall supportive and give us those risk on type days. So, yeah, I totally agree.
I know a lot of you guys probably don't care about the stock market in a vacuum, but I do. And people are way out of position here. What happened was, during 22 into the first part of 23, the attractive trade became like treasury instruments. Like, you know what? I can go get 4 or 5% risk free buying bonds or whatever. And now the stock market is just running this right back in your face. And I think big money managers are underweight stocks. I think maybe retail's underweight stocks. And now this is like, it's almost like a pain trade to the upside in the stock market because everybody is way out of position. We were going into a recession. There was some safe returns elsewhere, and this thing's acting phenomenally well. Cattle market yesterday was mixed-ish.
Yeah, it was mixed-ish, I guess you could say. Live cattle futures were marginally higher on Thursday, gaining an average of 25 cents, so nothing big to see there. Feeder cattle futures closed an average of 153 lower on Thursday as they continue their downward spiral. August feeders have dropped $9.12 in the past week and a half. Live cattle sales have been basically at a standstill so far this week, too few to trend. Choice box beef ended Thursday at 342.07, up 301. As of the close on Thursday, choice box beef has gained $9.14 this week and is record high for the state. Select ended the day at 309.58, up 32 cents.
Are you still a cattle bull, Matt?
Longer term, but shorter term, it's kind of tough. If you're sitting here buying feeders and Kenzie said earlier, corn's on a 90 cent upward climb. I mean, obviously that makes you a little bit wary to go out and spend 1,100 to $1,200 on a feeder. So I do think longer term, I still maintain when you get a blow off top or a topping type action, it's going to be because people are retaining heifers in the West. And I think when that happens and you see cattle on feed numbers even lower than what we've had, I think you could push these live cattle maybe to $200. And I know that's a high number, but I think that's going to be something the trade's going to go for at some point. But I think for right now, you've got to have a pause. And I think it's going to be healthy for the market.
Outside markets are really quiet this morning, guys. Remember, grain markets and a lot of other stuff are closed on Monday. So we will reopen Monday night at 7 p.m. Central following a normal grain close today. So we're off Monday. Podcast will be back Tuesday. Have a great weekend, guys. We'll talk to you next week.
Absolutely.